Hi there, and welcome to Calculations and Things. Today we are going to have a look at financial ratios with a specific focus on profitability ratios. Our first calculation is going to be the gross margin on sales, which in red is going to be your gross profit over green, your sales times 100 to get a percentage. So what you can do in this case is you can go and compare your percentage once you have calculated it to the previous years to determine whether there was a drop or an increase in the margin on sales. Let's have a look at the statement of comprehensive income. We are going to look at our gross profit there next to our red arrow, and that is 29,186. We are then looking at sales or our turnover amount, which is our green one, and that is 80,067. Doing our calculation for the gross margin on sales, we're taking our gross profit, which is 29,186, divided by green, our sales, which was 80,067, times 100 to get our percentage, and we get 36.45% for the year. Our second calculation is going to be the gross profit on cost of sales. So our gross profit will be in blue and our cost of sales in pink, and we will multiply this with 100 to get a percentage. Looking at our income statement or our statement of comprehensive income, we will be looking at our gross profit, which is in blue, and that is 29,186, and that will be our cost of sales in pink, that we will also use for our calculation, and that is 50,881. Looking at our calculation, we have gross profit over cost of sales, so that is the 29,186 divided by 50,881 times 100, and that will give us 57% and 36 at the end, rounded off to 57%. Our third calculation is our operating expenses on sales. So our operating expenses will be in green, and that will be over our sales or divided by our sales, which will be in yellow, and times 100 to get a percentage. Here is our statement of comprehensive income. Our first one in green is our expenses, which is the 24,534. Then we have a look at our sales, which is in yellow, or our turnover, and that is our 80,067 for the financial year of 2022. Looking at our calculation, in green, our 24,534, that represents our operating expenses from our statement of comprehensive income, and it is divided by our sales amount, which is 80,067 times 100 to get a percentage, and we get 30.64%. And then what you can do also is you can go and do the calculation for the previous year, which would be 2021, and do a comparison to see whether there was an increase or decrease in our operating expenses over sales. Our fourth calculation is operating profit on sales, which is pink operating profit divided by sales, which will be in yellow, and we're going to multiply that with 100 to get our percentage. Here is our statement of comprehensive income. In pink, we have our operating profit, which is 6,773, and our turnover or sales amount in yellow is 80,067. Let's go and do our calculation. Our operating profit on sales in pink, 6,773 for the profit, divided by the sales, which is 80,067, multiplied with 100, and we get 8.46%. Our last calculation is our return on total assets, also known as return on investments or ROI, and that is our net income after tax divided by our total assets multiplied with 100 to get a percentage. Let's look at our statement of comprehensive income, and way at the bottom we have our total comprehensive income for the year, which is 4,448 for the year of 2020. And in our balance sheet or our statement of financial position, we have our total assets, which for the year of 2022 was 56,079. Our last calculation, which is the return on assets, also ROI, return on investment, will be our net income after tax divided by total assets. And I showed you that we get the net income tax way at the bottom of the income statement or the statement of comprehensive income, and the total assets, which come from our statement of financial position. So we get 4,448 for our net income after tax, and we got 56,079 for our total assets. We multiply this with 100 to get a percentage, and we got 7,93 rounded up to 8%. So our ROI, or return on assets, is considered good when it's 10% and above. We are not too far off. An 8% return is quite good in comparison with if you would have left your money in the bank, where you might have get a 6 or 7%. So our 7,93 or rounded up to 8% is still a good ROI, though it would be ideal to have 10%. And that is all for today. Make sure that you like and subscribe for more videos on accounting or other calculations.